Exactly. There are good, honest people out there doing deals, but if it's something to do with trading or crypto, be very skeptical. And or if there's something like a boat or a timeshare, or airplane, these are ones that are common scams too. I've known a lot of people who've fallen from them. I knew a gym owner, I knew a magazine owner. They fall for these things because they sound so great. Oh, it's a physical asset. It's an airplane. It's a boat, but things go wrong with these deals. And so the SEC, let's get back to that list. There's a little list of stuff they say. If it's in the pitch, get skeptical. So that's things like promises of great wealth and guaranteed returns. Everyone is buying it, pitches, pressure to invest right now, over the top sensational pitches that may have false testimonials. So these are some of the things to give warning signs. Have you heard pitches like this? Is this something you've been
Yeah,
familiar with?
definitely I heard that, but in last I would say episodes when I was presented such stuff, I just go away from them immediately, and now I'm looking purely on the track record, on the numbers, past numbers, and current numbers, because I just know this technique. Then these people just sell you their atmosphere. They sell you the feeling that you will be successful, and they show it on the pictures without pointing out how they can really achieve that and whether they have this experience of fulfilling their obligations or not.
The next things that the SEC warns about is unsolicited pitches. That means you didn't approach them, they approached you, seeking to obtain your personal information, asking for you to pay for investments by credit card, gift card, wiring money abroad, or to their personal account, or using cryptocurrency. These are all big warning signs. So don't do business with these people who approach you online. The SEC specifically says you should ask lots of questions to find these holes. Ask for previous people who've made money. Ask to see proof that of every single one of their claims. They need to show you inside their accounts, prove that they've made the money, prove how they've done it. You need to research every investment opportunity thoroughly before you invest. Conduct a background check on any investment professional. Go to investor.gov. If you're in the US, that's a very good way to do it. What are your thoughts?
Yeah, this is a really clever way to do that. And I also want to add that in most cases, when you get contacted by these people, this can be the result that you went somewhere and you put your email address or number or name. And by chance, these guys just took these contact details from different places. Currently, there are laws in the California, in the different states of the US, and also in the European Union, like different cookie protection and personal privacy information protection. And you can really ask this question: so where you get my contact details from? And you can actually sue the people if you do not receive the proper answer and they just find your contact details by unlegal things or just taking the base from somebody illegally.
A lot of these guys will fail the most basic questions. You ask them what their website is, they don't even have a website. Sometimes they'll have a website, but on that website will be a physical address. And when you look them up, there's someone else at that physical address, or that floor on the building doesn't even exist. I've contacted a building manager and said, does this company occupy this space in your building? And they said, never heard of them. So you need to do your due diligence. And to wrap this episode up, we're going to go through a kind of a summary from a slightly different angle to really get these points into your head in a different way. We'll do them one at a time. So starting off with stop and think. Does the opportunity sound too good to be true? What's your final thoughts on that topic?
I think this is super important topic for our viewers and listeners. This can really save you a lot of money, especially in the beginning, because we all do not have enough experience when we enter the new field, which we really like. In most cases, when we just make these basic mistakes, most people can just say that this thing doesn't work and there is whole scam without actually identifying what is wrong or right. and people can just go away from that, and they will be disappointed, and they can lose their money as well.
So the next one on this checklist after stop and think is do your research. Thoroughly check the individual and the firm. Look for qualifications, credentials, reputation, and history. Over to you.
This is a really great thing which you mentioned about the due diligence, because most people just forgot to Google their particular address or particular number or call the landlord and ask whether this company occupies this building or not. Because in some cases you can be caught on any like basic mistake without don't looking on the particular detail in the document or on the website, etc.
So the next one is ask questions. Any concerns about the firm or the opportunity, ask them about it. Legitimate firms will want to give answers to the toughest questions. They love talking about themselves. People who aren't legit are not going to be wondering to answer questions. What are your thoughts on that?
Yeah, and in this case, you shouldn't be too polite thinking that you can just offend the person by asking this question. This is your money and you need to be really responsible for it. And this is okay to track and to ask for track record and ask for legal documents on and all the proof for the work which you just invest in.
So that brings us to the next one. Verify information. Check all the information with a trusted third party, such as a government agency or a legal or financial professional. Check any associations that they've claimed. If they say that they've worked with XYZ, go and speak to XYZ. So that's the verification step. What are your thoughts on that?
Yeah, and actually you can prepare such kind of the checklist with the bullets of such organizations and websites where you can just go and check all these legal addresses, numbers, licenses, and all this stuff. And if you can just do this as the sample work, you can filter a lot of unnecessary things.
So this is the double checkpoint, and this is essentially very similar to what I said about if you think you're dealing with Amazon or Apple, IRS, be sure that the firm that you are talking to or researching is the one you're actually dealing with. So don't call them at the number that they've given you, the scammer. Call the listed number in customer service on the website of the company that you think you're dealing with. See if that person even works there. So the double check point is, I think, one of the most critical to make sure that you're actually talking to who you think you're talking to. What do you think?
Yes, and one of the most important things is which you can just check, not the contact details on the website, because it can be also fake, but you can go like on the Edgar website or to look for 13F filings and look for addresses there, because it is really easy to fake the website of the particular company, but it's really hard to fake the filings in the government system. And if you just find the addresses, usually it is written there, and you call and go there, you can find out that probably this is not the company you are dealing with. And the real company is completely different and doing completely different business.
So for those who aren't aware, what he mentioned when he said Edgar or 13F is effectively the SEC in the United States is the sort of governmental entity that tracks which investment firms are doing what. And they have a tool called Edgar, where you can look up the 13F, which is a form that these companies have to file if they have over a certain amount of money under management. Everything you find there has to be accurate. Every figure, number, if something is wrong there, these companies don't just get fined. Often, if it's bad, the CEO and the CFO and maybe the accounting firm all go to jail. So
yeah, and usually these guys want just to impress you, so they say we like manage 500 million, 1 billion, $10 billion in our fund. And usually, according to the law, if I remember correct, everything and every fund which is over $100 million should file this 13F, and these funds should do this every quarter without any exception in the US.
All right, absolutely. So the next point on this list is ask about risks. Legitimate firms or investors will be very clear about the risks. Scammers will try and persuade you with a phony guarantee, minimizing the risks. that any real investor or opportunity will be very clear about what the risks are. What do you think of that?
So this is what we discussed previously, that there is nothing which you can just imagine not without any risk. So everything contains little risks in everything. So you need to be really careful, and this is the different rule. Like if it is too good to be true, it is probably.
Exactly. So the next one is discuss withdrawals. Trustworthy firms will have a transparent withdrawal process. Ask about fees, restrictions, timeframes, and they'll be very transparent if they're legitimate. Your thoughts?
Yeah, and usually if this is a well-established and a real fund or financial institutions, they have all their legal documents prepared. So you can just ask this question, and you like will receive the documents in 5 or 10 minutes via email. And if some people say that we need like 2 months or 2 weeks to prepare the documents for you, this can be the code, because there's something can happen. And actually in most cases there are different fee structures, and of course it depends on the hedge fund, but usually 90% of such funds like receive the performance fee and the annual fee fixed in the fixed amount, like 2% for their work. We would also create such kind of fund, but we would like to receive only the performance fee, because I think that it is completely legit, and it is fair for investors to pay based on the result.
Totally agree. So the final point on this checklist is to take your time. There are very few legitimate investment opportunities that require you to hand over money immediately. The only ones that are legit, that have some kind of immediacy, is if they're approaching you for a specific deal. This house, we're closing in 90 days. But even those, you can skip that deal. If they're a legitimate company, there will be other deals. So never feel pressurized that you have to take this specific deal, or especially if it's something to do with stocks or crypto, or most legitimate offers will be ones that'll still be around in the far future. So never feel pressurized. There is never a time thing. People who are flipping houses, they flip a new one every 3 months, or missing one isn't going to be a big deal. So if they're pressurizing you, there's a reason they're pressurizing you, and it's usually not a good reason. So that's the last point on my little list here. Your thoughts?
Usually these people just play on the situation when you do not know the sphere properly, so you're like the complete beginner in this. And if we speak about the stock market, you can have plenty of time to make the decision, because even Warren Buffett, who manages like $500 billion, it is the market cap of the Berkshire Hathaway on the stock exchange, he can wait for perfect price for years. So he has plenty of time analyzing the company. He can spend 1 year just reading about this particular company, the history, the management. So there is no urgency in that. But anyway, we think that this document was useful for you, and you will really save the money and time with that. This is all for today. We will continue next time, and see you.